Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's video, we're going to continue from yesterday's pump that we had and see exactly where it's developed to. Also, we'll have a look at the candlestick patterns that we were looking out for to give us some direction as to which way this market will go. I'll also have a look at a general overview in terms of the longer term as well as the shorter term and make some headway in terms of where the price may go in the next few weeks and months. But before I do that, the usual polite reminder, please remember everything in my videos is only for educational purposes only. Nothing should be taken as financial advice. Please do your wider research before making any investment decisions. Okay, so I'm going to start off today by the statement by the US government yesterday, which seemed to have triggered off the big pump that we had yesterday of around about $3,000. This was the statement here, which I posted in the tweets yesterday. And then I followed that up by asking the question, is this a fake out? And to see whether there's a swing trade to a certain price. And then in the evening yesterday, when I saw some developments of these candlesticks here, I sent a tweet out to say that on the 4-hour time frame, there was the tweezer tops, which are these here. I know some people tend to have a look at these wicks, whether they should be on the bottom side or the top side. I think generally they play out very similarly. So when I saw the tweezer tops here, I had to tweet out that the 4-hour tweezer tops are bearish reversal patterns with high probability rate, and that the 61.8 Fibonacci retracement will bring the price back to 39,200. In fact, it came back down to around about 38,800, but it's finding support at exactly 39,200, and it seemed to have played out. If you want to follow me on Twitter, then please go to any of my videos. Below the videos there will be a link there. So below all of my videos in the description box you'll find the Twitter link here. So basically we got these tweezer tops here, and the way to measure them in terms of a retracement would be to take the Fibonacci retracement level from the bottom where it started to the top, and there you get the actual levels here at the 61.8. There we go there. And that obviously helps in trading to navigate through these charts and through these candlestick patterns. So the current price has broken the key $40,000 mark here, and we're trying to break much lower than that here. So what that tells me is that the 40,000 is proving to be quite a weak support, having gone through it all the way through very, very quickly there. So we're going to have a look today at some of the other support levels below here, which I'll be going through in a minute. So yesterday, when we came up to this level here, at around about the 42,300 level, I was waiting for this level here, the dotted red line here, which goes back to December the 4th flash crash that we had. And I've always had this line on my chart because this has proved to be extremely important support and resistance along this way here. As you can see, time and time again, it's proven to be very strong support and resistance. And I thought once we get past that, there would be an opportunity for a swing trade up to the 45, 46 level. Obviously, it didn't materialize, not having broken the 42,300. So our narrative still holds true. This move here didn't really affect anything in the overall bigger picture that we have here. We still need to get above 46k in order for us to flip to the bullish side. But judging by what's happening in the overall bigger picture here, we're still making lower highs along the way here. And that's why we need to break this last lower high at the 46k in order for the markets to move back up. In the process also, we've made lower lows along the way as well, to see whether these will hold. And these are the levels I'm going to be looking at now. Now that we've broken the $40,000 mark here, the two levels to really look out for is this blue line and this orange line here. If we zoom in here, we can see that the support blue line here is made up of the bottoms of these candles as they came down and found support. So the first critical level that we mustn't break is this level here, which is at around about the 38,000. So if we go below the 38,000 here, then the real next support, as you can see, there's no support at all below there. The chances are we're going to find ourselves all the way down to these levels here, around about the $35,000 mark. And obviously there is the horizontal support line here at around about 37,000, but failing that, 35 is the next support line. But judging by the way we've just completely gone through the 40,000 here to the downside. It may well be that we're going to be testing lower levels here at around about the 28 to 30,000. So this becomes on the table with a higher degree of probability now than before. Now, should we go to the lower side over here, it then brings into play the larger head and shoulders pattern that we're forming here. For those with a discerning eye will be able to see that we've got a left shoulder here, a head over here. And if this was to play out down here, then we would have the completion of the right shoulder. And then this neckline comes into play. And if you were to measure this neckline from the top here to the neckline there, it would bring the price down by another 55% from the breaking of here. And that would take it down to around about the $14,000, $15,000 mark here. So basically on the bigger picture, what we've got are some quite strong bearish signs like this head and shoulders pattern, but there are some bullish signs as well, which I'll go through in a second. There was a head and shoulders pattern developing over here with this move, which was going to this level here, and that would have broken down to the lower side. But the move yesterday negated that. But like I said, a larger head and shoulders pattern is developing here. And we need to be very well aware of that because they do play out in a higher degree of probability. On the bullish side, you can see quite clearly that we are actually in an ascending triangle here. And that is a bullish pattern. And that is why this 46,000 level here, 45, 46 level here is absolutely critical. If we can just break above that, it would have a reversal effect on all of this and invalidate the larger head and shoulders pattern. And looking on the weekly chart, I've been mentioning in the last few videos about the inverted hammer candle here. And the current weekly candle is also turning into an inverted hammer candle here as well. But that obviously has a few more days to go before it completes. And certainly this is bearish as far as I'm concerned, and has the power to move this to the downside. And as I've said, the length of this candle is around about 17%, and that will take the price down to around about the $30,000 mark, which seems to be in confluence with the previous support and resistance here. In conclusion, all I would say is that this inverted hammer candle is playing out. It's going to be very difficult to get above this top of the wick here at 45,300. So I'm expecting a further decline here towards these levels at around about 28, 30,000. And if we put on the 200 weekly simple moving average, is moving in the upward direction and the price is above it. So the longer term trend for Bitcoin is still to the upside. And obviously we're going to get these lower short-term movements. And as I suspect, just like here at the end of the bear market in 2018, and then the COVID situation here, if we do fall down here, we will find support at the 200, which is at around about the $20,000 mark. And that would be in confluence with this over here. And the main thing is the dividing line here, current price is the 40,000. As long as we're above it, there is a very good chance that we can go above the 46 and go higher. But as long as we're below the 40,000, we're going to have these in play, all these price levels down here. And we always have to be wary of our biases, and no matter what, we all have our biases, even though we try to be as neutral as we possibly can. But the 40,000 is really a dividing line for me, and I'm prepared for either scenario, as good investors and traders would be. Okay, so we'll leave it there. Hope you found value in the video, and if you did, then please do remember to like and subscribe if you haven't already done so. And if you want to leave any comments, questions or suggestions, then leave them in the comments below down here. And also a special mention to say thank you very much to all my subscribers for making this possible here. So we just recently hit the 5,000 subscriber base, and obviously I couldn't have done that without you. So a very big thank you from me to you. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.